The trend is your friend. Ride it until its end, until it reaches its bend. We are going to look at the macro and the intermediate trend of Bitcoin. Are we likely to see all-time new highs now, or are we going to see an intermediate correction beforehand? So based on logic, objectivity, non-emotional, technical analysis, Elliott Wave and Fibonacci, we're going to do a deep dive into Bitcoin. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to only focus on currencies, but now exclusive on crypto. So let's dive straight in. So here we have the chart of Bitcoin. Yes, Bitcoin. What you want to know is markets moves in fives and threes. Fives and threes. And it's the human psychology of mass herd psychology of buying and selling behavior that is reflected in the price. And that's what we're looking at over here. And the macro trend is clearly up. We got this nice wave 1. This is 2017. Correction 2. We got what we're looking like a wave 3, a potential. We're on a wave 4, and we're going to see a wave 5. So the overall, you can see the overall direction is up. So the macro is literally up. However, when we zoom in, the intermediate, we've had this nice Bitcoin surge recently. And if taken out of context, it can possibly, because we can only do probabilities and never certainties, can be misleading. So Bitcoin over the last couple of weeks has gone from, 37,000 to now 48,000, which is very, very optimistic. Look at that surge. It's almost literally pointing up. There's a lot of optimism coming into Bitcoin. But when we're looking into the context of Elliott Wave, now what Ralph Nelson Elliott figured out in the 1800s and the 1900s, all markets, including crypto, is driven by human emotion. And more often than not, the patterns are identifiable in advance. And again, we're looking for fives and threes. 5-wave impulse, even on the downside, followed by a 3-wave correction. That's what we're looking at. But there's a few clues that we can take to see what is the probability of this. Is this going to be all-time new highs? And we're going to see the price exceed this former all-time new high over here, which was the $67,000 mark? Or is this an intermediate correction? And we should anticipate one more move to the downside before we see an uptick to the upside. That's what we're going to look at. Now, there's two things going on over here. One of my students said to me in my community, because I shared this in we got a private Telegram. When you buy one of my courses, you get an invite to my private Telegram. And I just shared a screenshot of my Bitcoin analysis. And they said, Jigel, I really hope you're wrong. And I replied, so do I. Right? I'm not looking to be right over here because I personally want, if I had a magic wand and I could have my way, I would love Bitcoin just to make all-time new highs and that optimism to come back into the entire market, especially the mid caps and the micro caps. But what we're doing over here is objective, non-biased analysis, because Bitcoin is often a great indicator for the rest of the markets. When Bitcoin is really pumping to the upside, the whole market is doing well. So we know, we can look back into the past data, this part of the market and this part of the market, when Bitcoin was surging, all the other cryptos were also surging, like incredibly well. 2017, if you look back, when the 2017 bull run was happening, all the other coins were just extraordinary in terms of the price action that we were seeing. So just so we're on the same page, we're doing analysis to give us the edge to make intelligent business decisions based on what's likely to occur, not what I want to happen. So just to be very, very clear. So what we're going to do first, I'm going to jump into a weekly chart. And the top left-hand corner is where I keep my weekly chart. And you'll see I've just got the momentum indicator. And the first thing that I want to really, really bring to our attention is that this momentum is overbought, meaning that the blue and the red line are above this black line. And what that tells us, there's different momentum indicators. We're using stochastics RSI over here. For those that you are interested in the setting, here's the settings. What this tells us is the upside, the immediate upside over the next couple of weeks should be limited. So it should be sideways and we shouldn't expect at least a short-term reversal. right? That's what we're looking at. This is the clue, right? The momentum, just so we're really, really clear, is overbought. That's the terminology, because often with the momentum indicator, you can see that these highs and the momentum are often, they marry up. If you see the highs and you see the highs of the actual chart, they marry up. So now we've got this next high and the momentum is looking like it's overbought. So this is a very big clue for us that we don't want to take lightly. It's just that the probability would state right now the market is looking like we should anticipate sideways to down. And then we want to take it into the context of pattern. Right? Again, remember, markets moves in 5s and 3s. By the way, if you're brand new to Elliott Waves, or even if you've been learning it for a while, I've actually created an Elliott Wave Fibonacci Masterclass in the description link below. When you click the link, you'll be taken to a page that looks just like this. Free Elliott Wave and Fibonacci Masterclass. When you click on it, you'll get immediate access. And I've covered the 3 secret rules. Well, they're not really a secret. They're the fundamental rules that Ralph Nelson Elliott figured out in the 1800s, 1900s that show you what makes a valid Elliott wave count, but also what invalidates the count. And that's very, very useful, powerful information, because what we're aiming to do is be 2 steps ahead of the market. Most individuals are 2 steps behind the market, so we're reacting as opposed to anticipating. And here what we're looking to do is anticipate. So if it, we can make just more intelligent decisions. So now let's just get really, really focused on 2 things. One, this is a clear impulsive move to the downside. Right? I say impulsive, that the moves are not overlapping and it seems impulsive. And I'm labeling that as a wave, a potential wave A, what it looks like. And then when I zoom in over here, this looks like an A, a potential A, B, C of a B, right? That's a typical 3-wave correction, right? 3-wave correction. And I've drawn these ratios, the key ratios over here. I cover these in my masterclass, by the way. They're the key retracement ratios. When the market moves down, what are the key, typical, most common correction ratios? And that's what these lines are over here. And there's a few of them. We've done a few relationships. So now what this does, it tells us this is a high probability resistance zone. We've got the momentum, which is topping out, we saw on the weekly. We've got pattern, again, we're referring to an A, B, C. And then I'm also going to bring up the momentum on this daily chart. I'm using a setting on this one. I'm just trying to get a setting that's pretty good at getting the highs in particular, the macro highs, without being too noisy. Because sometimes you can go into indicators which can be helpful, like an 8 indicator. This is like a faster one, but it catches everything. So I've gone to what's called a 21. I covered this kind of stuff in my courses. I cover it in my courses. But the main thing here is that it is also overbought. So the upside should also be limited. So over the next few days and weeks, we should anticipate sideways to down, right? So it might be a bit more upward movement for the next 1 or 2 days. But then the macro, what I'm looking at is the macro, meaning the bigger picture, where we may see a further upside movement, which is more optimism, breaking or retesting the 50K mark of Bitcoin. But my thinking is that we're probably going to see one more leg to the downside, at least this amount, which is a correction to this part. But likely, I think it's going to be a wave C. And then if I had to put a count on it, I would more see it like this. And hopefully that makes some sense. So there you have it. Bitcoin's emergency update. If you ask me what I want as Jagir, as the person, the individual, I want this, right? This is what I want. I want parabolic Bitcoin movements because I know what it does for the market, because it's optimism and that euphoria will come into the market, and that's really great for all cryptocurrency, all the altcoins, the large caps, the mid caps, and the low caps. However, if we put that aside, we go, okay, that's the dream, the magic wand. All right, let's put that to the side, and then we go reality, high probability, objective. What's the momentum? What's the pattern? What's the price? Those 3 things are suggesting that the immediate upside is going to be limited, and we should anticipate sideways to down. If that's the case, we need to prepare for that, make decisions in accordance to that. Now, it doesn't mean it's going to happen. right? It's probabilities and never certainties. And what I personally do is I always go with the probability. So you're leaning on the probability. And even if it doesn't go your way, you've made the right decision by going with the probability. That's the key thinking that I want to get across. So if you want to learn Elliott Fibonacci, take the free masterclass. It's in the description link below. You'll get immediate access. And if you like it, you'll get an opportunity to buy one of my courses. You'll get an invite to my private Telegram. We do weekend workshops. Brilliant community. And we're growing. And really now is the preparation phase for the optimism. Because look, we are in a $1 trillion trend. The market cap of entire crypto has gone above 2 trillion again. It was hovering at 1.7 trillion for a while, but again, I haven't seen the follow through yet. Based on momentum, pattern, and price, I like to keep things really, really simple. I go, okay, we just need to be wary that we're not out of the woodworks yet, because it's been very corrective over the last, almost since April. We've had some ups and downs, but mainly sideways to down. All right, let's finish on a quote from my book. Today's quote is chapter 4. It's from Benjamin Franklin. He or she who is good for making excuses is seldom good for anything else. I'm a big believer in opportunity that meets preparation. That's where success happens. And what I'm always looking to do is sharpen my personal axe and my students' axes to go, look, let's sharpen the skills of momentum, pattern, and price. Elliott wave, Fibonacci, price. There's these key ratios, and we see these patterns time and time again. And this market's here to stay. Crypto's here to stay. We're 12 years into the game, 12, 13 years into the game, but we're literally, I'm saying literally at the beginning, literally in the sense of 12 years of a century worth of new technology. It's going to revolutionize the world more than the internet itself, because of the value of trust. The way trust is going to be delivered and needed and executed is different. We're not going to need these physical contracts no more, because we're going to rely in a trustless environment called the blockchain, which is really, really powerful. So if you like today's content, like, subscribe, hit the bell notification, and I'll see you very soon.